Hey there, everyone! Welcome back to our channel. If you're new here, I'm so glad you found us. Today, we're diving into a topic that can really help you make the most of your investments, tax loss harvesting strategies. Now, I know that tax talk can sometimes feel a little dry, but stick with me. We're going to break it down into bite-sized pieces. By the end, you'll be armed with some valuable insights to potentially save you money come tax time. So, let's get started. But first, let me ask you this. Have you ever sold an investment at a loss and thought, what a waste? Well, what if I told you that selling at a loss doesn't have to be a bad thing? In fact, it can be a strategic move to lower your tax bill. Intrigued? Let's explore how tax loss harvesting works. Tax loss harvesting is a strategy that investors use to offset capital gains by selling investments that have lost value. In simpler terms, if you sell an asset for less than what you paid for it, you can use that loss to reduce your taxable income. This can be particularly beneficial when you have realized gains from other investments. For example, let's say you invested in two stocks, Stock A and Stock B. You bought Stock A for $10,000 and it's now worth $15,000, giving you a $5,000 gain. Meanwhile, you bought Stock B for $10,000 and it's now worth only $7,000, meaning you have a $3,000 loss. By selling Stock B, you can use that $3,000 loss to offset your $5,000 gain from Stock A. Instead of paying taxes on the full $5,000 gain, you only pay taxes on $2,000. That's a potential savings right there. Now, let's bring in some numbers. Depending on your income level, long-term capital gains are typically taxed at 0%, 15%, or 20%. If you're in the 15% bracket, that $2,000 taxable gain means you'd owe $300 in taxes. That's $300 you can keep in your pocket instead of handing it over to the IRS. And if you're in the 20% bracket, that number jumps to $400. Now you might be wondering, what are some key benefits of tax loss harvesting? Here are a few. 1. Tax savings. As we just discussed, offsetting gains can lead to significant tax savings. 2. Portfolio rebalancing. Selling underperforming assets gives you an opportunity to rebalance your portfolio and reinvest in more promising options. 3. Psychological benefits. It can help you let go of losing investments and move forward with a fresh strategy. 4. Carry forward losses. If your losses exceed your gains, you can carry forward those losses to future tax years, up to $3,000 per year for individuals. This means potential savings for years to come. But wait! Before you rush to sell your losing stocks, there's an important rule to be aware of, the wash sale rule. According to the IRS, if you sell a stock at a loss and then repurchase the same stock or a substantially identical one within 30 days, your loss may be disallowed for tax purposes. So, if you're thinking about tax loss harvesting, make sure to either invest in a different stock or wait at least 31 days before repurchasing. Here's a quick checklist to consider when implementing tax loss harvesting strategies. 1. Review your portfolio. Regularly check your investments to identify potential losses. 2. Evaluate your gains. Know how much you've gained this year to understand how much loss you might want to realize. 3. Consult a tax professional. If you're unsure, getting advice from a tax expert can help tailor the strategy to your specific financial situation. So, to wrap it up, tax loss harvesting can be a powerful tool to help you manage your investment taxes effectively. By strategically selling your losing investments, you can offset gains and even carry forward losses for future tax benefits. Just remember to be mindful of the wash sale rule and consider consulting with a tax professional if you have any questions. If you found this video helpful, please give it a thumbs up, subscribe for more financial tips, and hit that notification bell so you don't miss out on our future content. And of course, share your thoughts or experiences with tax loss harvesting in the comments below. We'd love to hear from you. Until next time, happy investing!